Hey guys, what's up? So basically, we are in my Fidelity, and I just want to show you guys something, maybe before the market close, and basically discuss to you guys, exactly what is going on right now, and basically, as we all know, the market is technically crashing, and everything is down tremendously. So for the past couple of weeks, maybe like 3 weeks now, we've actually been on a bullish trend, and basically in one day we wiped out the entirety of the gains that we made in the past like 2 3 weeks. In one day we wiped the entire, almost the entire gain we made in those 3 weeks. Okay, so as you can see, the Dow is down 1,700 points, the Nasdaq 472, the S&P 170 is going up a little bit right now, but it's still really bad. Compared to where we were at the past couple of weeks, especially last week. And I knew this was going to happen, just because of we were reaching overbought territory. People were extremely bullish, to the point of greed, and it's just like things like this are bound to happen. The stock market gives and it takes. Okay, so if you're not a newbie investor, you didn't start investing 2 3 weeks ago, then you would know that this has been happening all year this year, and this is not something that's new. And basically that you know that this is gonna eventually go back up, as long as America is exists and not in shambles after this year, because we don't even know what's going on. We might actually be doomed as a civilization now. So but yeah, as you can see, this is basically those points that we're losing. And yeah, so with that, I'm basically just here to tell you guys that you should always start a long-term portfolio. That is the core basis of investing. It's not a get rich quick thing or scheme or whatever, and you're not trying to make a a large amount of money in a week. What happened the last 2 weeks is something that rarely ever happens. And we do have bullish trends, but those were a very bullish trends. And now, as you can see, today in one day we lost all the gains that we have made, because I believe this is what I believe. I believe that the market, or the market makers, or whoever, they want Jerome Powell, they want the Fed to cut interest rates to negative. And that would be a tremendous loss for the US economy, when you're harboring people who save and making them spend their money because they would have to pay a fee to save their money. You're making banks have a extremely low interest rate so they can loan out more to people who are already in debt. So we're just having a huge cycle of debt and no recovery. And that will definitely hamper our economy, and we'll probably never come back from a negative interest rate. Okay, that is the fear that people are feeling. And I don't know why we would need negative interest rates when the economy is starting up again. And yes, people are also scared of a second wave of coronavirus, which to me is dumbfounding, because we have been in this for months now. It's at this point, it is okay. Like, at this point, even if we do have a second whatever case of that, why are people still so scared about it? Like, the economy is opening. There's no way that we're gonna go back to lockdown. There's no way. So at the end of the day, even if there's a second coming of coronavirus, at the end of the day, we're not gonna be on lockdown. So we're still all gonna be outside. So we're still going to be spending a little bit more than we did because we're not on lockdown. So it's just like, why is the market channeling that into consideration when it shouldn't be that way? Because it should already be priced in. Like, yes, another more cases might pop up, of course. Like, but are we looking at the people who recover? Are we looking at the people who die? Are we not seeing that? Like, why is news outlets still continuously talking about this? I feel like they want the collapse of the economy, and they want to see America go down. Like, it has to be that way, because what is the purpose of doing something like that, covering something to the extent of random fear and panic? You know, is that how things should be? But again, I'm basically telling you guys, look, this is going to happen. If you're not investing for the long term, you will be a sad person, at least for a couple of years, until you get down whatever trading method you're doing. You will be a sad person. Me, I'm chilling. I lost some money doing a credit spread. I'm losing money right now doing a option play, another one, you know, and it's not really affecting me because I have a long-term portfolio where I chose some really reputable companies, and even though they're down, I'm still up from whatever I was, you know? So whatever is down in my long-term portfolio is just the gains I've made, and it's not even that much, you know, like, you know, it's the gains I've made. I'm not even down that much. I'm not down every to my last penny in my long-term portfolio, you know, because I'm choosing reputable companies and things I know that will be here, or I believe to my core that will be here for the long term. So always have a long-term portfolio. I'm telling you, start with that. Especially right now, things are actually, you know, losing value. You know, the price of things are decreasing. So we're kind of almost getting a restart to where we were a couple months ago. It's still not as bad as that time, but at this point, you should be buying some good companies because things are going down again, finally, which I knew that they would go down. I mean, it's obvious. So again, I would always say go for a mutual fund or index fund, right? So go for a mutual fund. And look, it's at 1,800 now. Look at that. It's dropping even more. So I would always say go for a mutual fund, right, for the first. And, you know, we can look at my watch list over here. So always, you know, you can go with any type of index fund or mutual fund like VTI over here, or you can go with something like the VOO, and you can do a mutual fund too as well. But I always like to go with the mutual fund just because the one that I choose, the one that I see, always happens to beat the S&P 500, always beats it every year. Okay, so, you know, if you want to look for a mutual fund that's going to beat the S&P 500 and give you at least a 12 to 15% return, and their fee has to be not too high, not like 1.0, not anything like that. The one I'm into, their fee is 0.7. So every $1,000 I invest or make or whatever, I have to pay $7 of it, which is, to me, I did the math, it's not too bad. It's not that much when I can make and I can beat the market every single year. You know, by the time I'm 40, if I invest $200 there, I could potentially have $500,000 just by investing until I'm 40, and I'm only 23 right now. If I continuously do it month after month, investing $200, I can have upwards of $500,000 in just that one mutual fund. By the time I'm 40, by the time I'm like 50, 60, I'll probably have millions. Simple, just 200. And we all know that I'm not going to be putting only 200 a month. It's going to obviously be more than that year after year as I'm making more money, as I'm saving more money, being wiser, gaining knowledge, of course. So I would say get a mutual fund, all right, or index fund. Index funds, they go with the market, they go with the S&P 500. So whatever the S&P 500 makes, you're most likely going to make with your index fund. So they really don't outperform the mutual fund that I'm in. But again, if you just invest into there, you'll actually be making a good return too, maybe like 10%, maybe 9% a year, which is really good as well. And also you're saving your money, you're gaining interest, all that, you're getting dividends, is being reinvested. And also with an index fund, the fee you have to pay is substantially lower than the mutual fund. It's about, I've seen some that's 0.03, some that's 0.003, so it just depends, and you're practically paying nothing at this point. So, and I'll go with some tech companies, some tech stocks. So like Apple, this I'm invested into, Microsoft, I'm invested in as well, and a little bit of Amazon. So I will go with that. And right now it looks like things are dropping again. So if you want to jump into them, definitely jump into it. So you want to make a risky play like I am, maybe get like a cruise line, maybe get a hospitality stock is in there, maybe like some kind of it's like you can look at Wynn Resorts, you can look at any kind of, thing like that, any type of hospitality, but just make sure you're looking at their 5-year chart, right? So, and then you want to have, after the tech, after maybe one risky stock in your mind, you want to have maybe something like a food and beverage company, maybe something like Walmart, Costco, just certain things like that, right? Pepsi. I'm investing into Pepsi because food and beverage, it goes a long way, People are always going to need some food, some beverages. People love Gatorade. Pepsi owns Gatorade. People love Lay's chips. Pepsi owns Lay's chips. All these type of commodities, all these type of things, right? You see what I'm saying? Then maybe if you want to go into something that deals with like maybe some kind of waste management. I don't even know what's classified them. Waste management. Because people, we need our trash taken out. So things like that. Simple things like that, and get a dividend stock and only be into like 6 or 7 stocks. You don't need to be into everything in the world, bro. Just make a long-term portfolio and then choose 6 and 7 stocks that are good companies. Look at their charts, look at their assets and liabilities, and make sure that they have more assets than their current liabilities on their balance sheet. Look at their stockholder equity. Make sure that it's increasing or should be increasing every year. Look at their free cash flow, should be increasing every year as well. Look at their earnings per share. Make sure it's good, like maybe at least a 2.5 to a 3. Just look at certain things like that. And look at their payout ratio for their dividends, and just make sure that you're investing into a good company. You have to take your time out, choose 6 or 7, invest at least $1,000 a year or something into those, max out your Roth IRA, and just max out all these things and just continue to invest until you're an old person and you have like $6 million in your account. And you don't need your kids to take care of you. You can take care of yourself. You know what I'm saying? And even, you be happy that you have something in your account that if you're in your time of need, you have this. So, and then if you want to on Robinhood or Thinkorswim or whatever, if you want to get into trading options plays, then do that as well. But have a long-term portfolio first. I have about 1,600 in my long-term portfolio, So I do options, but that's not my main thing in my mind. So again, the market is down. These are all advice. Please, if you want to take them, you can. I'm telling you, this will definitely help you out. Get a mutual fund, get index fund, choose some reputable companies. And I'm telling you right now, when you are older, you will not regret it. Everybody should be investing for the long term. Even traders have a long-term portfolio. Even traders. So do your due diligence, whatever people say, and just, be safe in these markets. Don't have fear. Things are going to go down. Things are going to go back up if the world still exists. If the world is ending and they take away the free market and nothing, then of course we all lose our money, of course. But if the world doesn't end, then we should be good, right? If the world ends, we're all done for anyway, for the most part. So it's like, who cares? So do what you got to do. Peace out, guys. I really appreciate y'all. Like, comment, and subscribe to the boy. All right, peace.